Hey, what's up everybody? It's David here. Welcome to the TDB channel, where I challenge you to think, dream, and believe in yourself with a focus on personal finance. Have you checked what your savings interest rate is at your bank right now? Let me give you the answer. It's terrible. Absolutely terrible. Abysmal. Next to nothing. Non-existent. That's what the bank's giving you for your money. Chase, Bank of America, and Wells Fargo, the top 3 banks in America right now. Chase is giving you 0.01% in their savings account. Bank of America, 0.03%. And Wells Fargo, 0.01%. These are awful. The national average for the savings account, 0.09%. Still pretty pitiful. If you were to look at an example here, and let's say that you put your emergency fund, and in your emergency fund you had $20,000. And now I know the emergency fund is really there just for emergencies so that you don't have to turn to debt if something were to come up. And you're not really supposed to make money on your emergency fund. It's really an insurance policy. But that doesn't mean we should just totally forget about it and not pay attention to it at all in where we park it. We want to get every extra dollar that we can out of it. $20,000 is a lot of money. So if you put that $20,000 in a Chase savings account at 0.01%, over the course of a year, it's $2. $2 in interest. Wow. Thanks a lot, Chase. And if you were to put that $20,000 in the national average of 0.09%, what does that give you? After a year, it's $18.01. So for parking your $20,000 in the bank for the entire year and letting them have access to it and do what they want with it, they're giving you $18.01. It's not even enough to cover a night out at the movies. You've got to be kidding me. Now, there really has to be. There just has to be some other place out there where I can have principal protection. I'm not going to lose my money. It's going to get a better rate of return. Must be something out there. Ah, yes. The high yield savings account. But wait, there's an intermission. This intermission is to remind you to subscribe, push the notification bell, and hit that like button. All right, now that we've done it, our intermission's over, and let's dive into the high yield savings account. So how did high yield savings accounts become a thing? It used to be back in the old days, you would just open a savings account at your local bank where you had your checking account. This was because it was super easy and convenient. You could easily transfer money back and forth between each account, and you didn't really have to worry about it. But with the connectivity that's come with online banking and the internet, this has allowed for competition to be created because you can easily now open a savings account online and have direct access to your checking account and instantly transfer the money back and forth. And so with this competition, it now comes to interest rates. And with these interest rates, we're able to get 20 to 25% higher interest rates at these online-only banks than we can at our local banks. And so now you can get interest rates north of 2% on your money. This sure as heck beats the national average of 0.09%, or God forbid, the 0.01% that Chase and Wells Fargo are offering us. So if you take that $20,000 example that we had looked at before, and you run it with the 2% interest rate, at this time, now after a year, instead of getting the pitiful $18.01, you're getting $403.69 in interest. And that's pretty awesome considering all you had to do was pay attention to where you were parking your money. And the amount earned can be even greater depending on the amount of money you have in the savings account. Now, you're not going to want to have too much cash on hand, but sometimes you are going to want to save up to buy some big ticket items. And if this is less than 3 to 5 years, you really aren't going to want to put this into the stock market because you're going to want to protect the principal. And if you invest into the stock market generally less than 5 years, you put yourself at risk of market fluctuations and you run the risk of losing some of that investment that you've put in. And therefore, this is where a savings account can be helpful. And again, though, you want to make sure you're getting the most bang for your buck, and therefore, you want to get the highest interest that you can. So let's say you're saving up for a down payment for a house, and your goal here is to save $1,000 a month, and you're going to do this for 5 years. So this means you're going to end up putting in a total of $60,000 of your own hard-earned cash. And so for that, if you run over to the national average bank and you put it in at 0.09%, that $60,000 will grow to an astonishing $60,137.45. So after 5 years of you putting your money into the bank account, you've earned $137.45. Atrocious. Now, if you're just a little bit paying attention and you put it into a savings account where you can get 2%, well, that high yield savings account is going to give you over $63,000 back. Well, that's pretty good for just paying attention to where you parked your money. Now, it's not going to make you totally rich and you're going to be rolling in it, and it's not going to be as good of a return as the stock market, but again, you're guaranteed to get your $60,000 principal back and then some. And that and then some is better than the $137.45. So pay attention to where you're putting your money and go ahead and open one of these high yield savings accounts if you're saving up for something that's going to be 5 years or less away in the future. So what are the options out there for a high yield savings account, and which one should you choose? Well, that depends on a few different factors. The first is interest rate. Secondly, you want to look at how much money do I have to initially put in as my deposit. Third, how much of a balance do I have to maintain in the account? Fourth, what are the fees that I have to pay? And fifth, how do I access my money if I need to get my hands on it for an emergency? So for me personally, what I look at to start is the interest rate. I'm going to want to put my money where I can get the most money that I can over the year or however long my money is going to be invested. But I do want to look at the other factors as well. And if I can live with those factors and make sure that I can meet them, then I'm going to choose the one with the highest interest rate. So if I search and see what the highest interest rate is right now, I have 2 banks that are out there that are offering an interest rate above 2%. And we're going to dive into those now. So number 1 is Elements Financial's Helium account. And now this savings account is going to actually offer 2.10% for 1 year. Now this is a temporary rate, but it is locked in for a year, and then after that year it will reset. And Elements Financial is actually a credit union that is located in Indiana, but it's actually open to everyone nationwide, and all you have to do is join True Direction, which is a $5 membership fee, and then you can take advantage of this account. Now when you open the account, you do have to put down a $2,500 initial deposit, but again, if we're using this as our savings account for emergencies, we should have 3 to 6 months, and so $2,500 shouldn't be hard to meet. And then one of the good things here too, there aren't any fees on this account. The second account, Brio Direct, they're offering 2.05% on their interest rate. Now this is an online-only bank, but what's pretty cool about it, there aren't any fees, and you can actually open the account with only a $25 deposit. So it's something to look at if you're looking to open maybe just a secondary or tertiary slush fund, so it's not your full-blown emergency fund, but you want to get a good interest rate on a smaller amount of money. But for me personally, I'm going to choose the Elements Financial Helium Savings Account. I think it's got an awesome interest rate. You're getting it locked in for a year with principal protection, and there really aren't any negatives from a fees or from an administrative standpoint. So that would be the option that I would personally be choosing. But what you want to do with these high interest savings accounts is really just think, where am I getting the best interest rate that I can, where I can actually meet all of the requirements, and I'm going to end up dominating what I can get at my local bank. So it's something that you want to look at if you're growing your emergency fund, or if you're looking to grow a little bit of money with principal protection over a 3 to 5 year period while you're saving up some money. So as always, if you're getting value and enjoying this channel, please subscribe, hit the notification bell, make sure you hit the like button, and in the comments, go ahead and post anything that you would like for me to cover in the future as a topic. And so until next time, remember to think, dream, and believe in yourself. You got this.